Welcome back to the Noob Selling Options channel, everyone. Man, I am absolutely thrilled you're here today. Because look, today's explainer, it's all about transforming what looks like a terrifying sea of red market panic into what could literally be your next massive opportunity. You know when everyone else is sprinting for the exits? Well, that's exactly when we need to be paying the closest attention.
So let's just dive right into this and systematically dismantle all this current market fear using hard, undeniable data. Because the big question on everyone's mind right now is super simple. Are we finally witnessing the crypto bottom? Look, it's so easy to get swept up in the emotion of these massive sell-offs, right? But hey, we aren't going to operate on emotion today. We're looking straight at the historical indicators of capitulation. You know, that exact moment when the last hopeful investors finally throw their hands up and just sell everything.
To do that, we've got a clear agenda today. First up, welcome to extreme fear. Second, the stablecoin spring effect. Third, the ultimate contrarian signal. Fourth, executing the barbell shift. And finally, the maximum conviction asymmetric bet. Let's get into it.
Okay, Section 1. Welcome to extreme fear, analyzing the panic.
So, the first major indicator of capitulation is always market sentiment. And right now, the crypto fear and greed index has rapidly collapsed deep into extreme fear, tracking between just 11 and 16 out of 100. Actually, scratch that. It's not just a collapse, it's a free fall from the neutral and fear territories we were seeing just days ago. It shows us exactly how fast retail sentiment just absolutely disintegrated under the crushing pressure of these recent liquidations.
And honestly, this brilliantly illustrates how the rapid disintegration of retail sentiment is the textbook setup for a macro bottom. Think about it like a giant puzzle. On one side, you have retail sentiment, which is just pure panic and forced liquidations, where over-leveraged traders are getting automatically sold out by exchanges, driving these crazy rapid price drops. But contrast that with the macro reality. Historically, this precise level of uniform widespread pessimism, it's exactly where macro bottoms start to form. The data points align perfectly with classic market capitulation.
Moving on to Section 2, the stablecoin spring effect, liquidity on the sidelines.
When we look at market liquidity, wow, the data is striking. Broader stablecoin dominance has climbed to over 15% of the total market, with Tether alone spiking past 9%. So, what does this actually mean? It means a massive chunk of market liquidity has entirely fled risk assets and is just sitting there, safely in cash. People dumped their crypto, they're holding stablecoins, and they're just waiting. Here is the absolutely crucial point. This aggressive de-risking behaves exactly like a coiled spring. All of that capital parked on the sidelines is fully loaded, just waiting to fire back into the market and catch a bottom the very second this current selling pressure exhausts itself. The fuel for the next rally isn't gone. It's literally sitting right there in the accounts, waiting for the green light.
All right, Section 3, the ultimate contrarian signal, traditional finance hubris.
You gotta love this. Traditional finance educators like Adam Khoo are proudly out there declaring, quote, "A non-productive asset with no cash flow, there is no bottom." Look, when permanent macro bears take these public victory laps during an asset class's ugliest week, specifically pointing out Bitcoin dropping to $61,283, Ether at $1,633, and Solana at $64.07, and they use that short-term volatility to declare the structural demise of the whole entire space, that is a glaring, classic peak capitulation signal. Historically, this kind of triumphant public mocking heavily suggests the retail shakeout is pretty much done.
Which brings us to Section 4, executing the barbell shift, transparent portfolio rotation.
Okay, so moving from macro theory to actual skin in the game, we're executing what's known as a barbell shift. This means selling off highly safe, stable assets to fund highly volatile, aggressive bets at the exact moment of maximum market fear. I want to transparently show you the highly systematic approach we designed specifically to capture this exact bottom. To really capture this capitulation, we completely de-risked from non-leveraged software equity. So by selling 30 shares of ServiceNow stock, that's ticker NOW, at $113.78, we harvested roughly $3,400 in cash liquidity. And then, we weaponized that cash to aggressively bottom fish. We bought 130 shares of BITU, which is a 2x leveraged Bitcoin ETF, at $8.86. Then, we took the rest of that liquidity to accumulate 500 shares of MSTU, a 2x leveraged MicroStrategy play,
at $3.21. So basically, by cutting safe, non-leveraged software equity, we funded this highly volatile 2x leveraged accumulation to capitalize directly on the forced liquidations that drove BTC towards $60,000.
And finally, Section 5, Maximum Conviction Asymmetric Bet.
When we pull all these data points together, you guys, the thesis is undeniable. We've got maximum fear flashing across the sentiment indexes, we've got tether dominance sitting near double digits, acting like a massive compressed spring of liquidity, we've got the TradFi crowd actively taking their victory laps in the media, and to top it all off, we have our tactical rotation from safe equity into 2x leveraged Bitcoin and MicroStrategy ETFs. Putting all of this together creates an incredibly asymmetric bet for a sharp, imminent relief rally straight out of this extreme fear zone.
So the data paints a crystal clear picture of peak capitulation. And I'll leave you with this final thought. Are you going to ride the relief rally, or are you going to let yourself get shaken out by the extreme fear? If you found this data-driven, contrarian explainer valuable, please make sure to smash that like button and subscribe to the Noob Selling Options channel so you never miss out on these transparent, high-conviction deep dives. Thanks so much for hanging out with me, and I will see you on the next one.